Market is open.
All right. Let's see. Oh, we're already live. Hey guys. So we might have a play today. It's going to be HX. So yeah, let's just get right into it. Yeah, we have a play today. HX. It's not ready yet, but it will be soon. Let me just switch to my screen. Okay, go. Pull on this. Put up stock to trade. Pull up stock craft. See which one's better for now. Put that off to the side. Yeah, so my plan today is first we have to see what's going on. So this has been running for 1, 2, 3, 4, 5 days. It's on a 6th screen day, and you know, we could treat it like a multi-day runner, but in this case, I'd actually treat it as something else. So it's doing a little pullback right now. I borrowed what do you call it? 500 shares. Yeah, I don't think it's gonna drop right here. Like this morning, I what do you call it? Yeah, I borrowed 500 shares. The price is up here for those that are worried about it. I borrowed 500 shares at 0.77. It was actually like 0.5 when I first woke up around like 4, but yeah, it went down to 0.77 towards, I don't know, it was like 4:30. And so yeah, that was a big jump in like 30 minutes. So I just bought 500, which is like 10K worth. What do you call it? Just to get my borrows back. If I do like a full position size, I need 5%. If I do half a position size, I need 10%. If I do like a third of the size just to get my borrow fees back, I need like 15+%. My max loss today would probably be like, 1,500. If I borrowed more, it actually would have been closer to 3,000. But what was I say? Yeah. But in terms of like my risk, I'm doing like 15% on a full position or 30% on a half position. And again, if I do the, a third, that gets me closer to like, what would that be? Like something like 60%. What was I say? When the play opens, like it's doing now, I'm going to look for maximum dollar block, float rotations, big pushes, breaks and consolidation, and already did the maximum dollar block. I'm looking for about 40 million to be traded around like 18 to like 23, like somewhere around the area. But since we're looking for 14 million dollar volume before it breaks, that's gonna put me at a dollar block of, yeah, you guys probably get the idea. Let me see the chat. Salutations, you know where I'll be. What's up, CZ? But now what am I doing? Okay, I got slightly distracted. Yeah, so the thing is, I almost I almost went in the pre-market when I kept seeing it like, what was it? It was close to like 4:30. Like when I saw it like do this first pullback, I'm like, man, I'm going to, I want to size in like 10% or something like that. I realized that was just my FOMO. I watched it for a while. It got to like this point, and I had that FOMO feeling again. And then all in like 1-2 candles, it went up to like 23, 24 area. And I'm just like, oh, I don't have anything to worry about. Still has a lot of people that are just getting the news that this is the top gainer. What is this? Oh, this ain't nothing. It's a dollar stock too. Yeah. Why is that even coming up? My filters are, oh, it's 5 cents over my filter. That's hilarious. But what was I doing? Yeah. So let's see. I don't really see a crack here, but if it does, what is it? Went from 25. This ran all the way from wait, we're on the 2 month. We could just go out. Yeah, went all the way from like 6 to 4. So let's say like 5, like about 5 to 25. That's like 500% over like 5 days. Is that right? Yeah, so like 500% over 4 days. We want to see that consistent liquidity always being gained, and it is in this case. Okay, so it's definitely struggling now, but I'm not. What do you call it? I'm not gonna go in like right at the open, not on a parabolic. I know way better than that, because that's how you end up being one of those early shorts that get squeezed later. And so, since it did this little pullback, what I'm looking for is like bare minimum. What's going to be worth what do you call it? My borrow size, which would be like 30% of my position, would be minimum like 22, like where it opened. And yeah, so I think I talked about this before. I'll just pull up like an overextended gap down chart, because that's pretty much what this is. Has to go up 100% the previous day before. Never traded this much volume. And basically over here you got 1 entry, 2 entry, 3 entry, and this basically says just so you guys can see it. Where I know I made it like, oh, here we go. You can put like a third on the previous close, risk that. Put it on the high of the day, which at this point is like 25, but that's the pre-market. So the high of the day is actually 22, and so they kind of overlap. And then the next would be like yesterday's high. And so this isn't the overextended gap down, because what do you call it? It didn't like, get the high, then drop down 15% and then open up into that like previous high. But it's the same concept. And the only reason I'm real hesitant on just going right in at the open, even though I know what kind of market we're in right now, it's just because it's a late day spike. And late day spikes, even if there is like a decent volume ratio between like yesterday to here, because this was only like 50, and right now we're only at like what 5, 7. How much was gain in this? Hold on. Yeah, because it's only been 5 minutes. So if I take this to bruh, don't tell me no, this ain't going straight dumped. If it does, it's not even worth it. I'll take that $400 loss. But I'm gonna short this. Or no. I can't think of that mindset. I have to control my FOMO. But what am I doing? The idea is this is supposed to take a while, but there's so many people that saw that this is up like 500%, and they're just trying to take their profits. And then all those early shorts, they're coming in. But what's gonna happen is if there's like some type of dip bounce around the 50% mark, which in this case would be, since it's a late day bounce, it's always hard to tell. So I'm just gonna go straight from like 9 to 12, 9 to 24, take off 9, that puts you at 16. And so like if there's a $16 range gain, $8 down, that'll put you at 17. So people should start dip buying real soon. And now like when that bounces, you're expecting like a 20 to like 30% bounce. And if it goes above that, that's where it might break out. It can legit go like so many ways. But what am I saying? I didn't finish my thought. Yeah. But it's a late day like gap up into the pre-market, and so you can't treat it as clean as a overextended gap down and just like expect resistance of the previous day and like consolidation to push it down. Because like right now it's below that consolidation it had in the pre-market, but pre-market is always like a little bit lighter because not as many people are in there. And so I'd still risk a bounce anywhere from like 21 to 22, and then like I risk the high of the day, but that'd be like a small position. Like my max position would probably come after a fake out, just like for my comfort level. But if I really wanted to like, test my luck, I want to say. I wouldn't even start it until like 21. Like any position's not really worth it until like 21. I could use this slight resistance here. And just bounce, like get something into like a bounce here. But that goes into like a risk reward kind of thing. Not only will I be risking, what would this be? $6 on a 20, like at this point it's like 17, 18, so about a $20 stock. So $6. Yeah, that'd be like risking 30% for no reason. Like it, versus getting the reward of let's see, this came from 5, but it's not gonna go all the way back down to 5 on the first day. If it does, that means it's gonna come back on the next day. So we're actually looking for something closer to like a 60, like 60% drop of like the gain. And in this case, we're just gonna use 9 to 24. So that puts us at like $16 gain. And then if we're just trying to aim for half of that, that's $8 down. That already happened. Starting from the pre-market. But now we're just going to look at the high a day because, some people they don't even have this information. So we have to think about them too. Yeah, it can go like so many different ways. But the main thing is when you're trading, you have an idea of what it's going to do. If it doesn't do your idea, you don't touch it. You take that small loss in your borrows, or if you're already in the position because you couldn't control your FOMO, you just want to stay disciplined. But again, I'm looking for, let me just write down the chart. I'm looking for 40 million dollar resistance. And so you know how to calculate that. What am I allowed to share that? I don't even know. But yeah. So it's pretty much, we're watching it today. But I do have shares. So it's gonna make me antsy or like on my toes. What do you call it? Yeah, like they're just consistently selling. And that's annoying. Real annoying. Now if I go to 2-minute chart, this is where it puts a little more pressure on me. But it's still the same game. Like, so in this 2-minute chart, highest candle was 1 million. And so we're going to start comparing the strength. And so that's a big drop right here. Like $4, and it only took 1.5 pretty much of like the volume to go that far down. But then you have this one that's like 1 million. And yeah, that's a $3 drop right there. So, they're pretty consistent. So like 1.5, $4 drop. 1 million, $3 drop. Now you get down to like, $500,000. Yeah, that's a $1 drop. And so the thing is, when they start dip buying below that level, there's going to be levels to the resistance. And I said it before, like I could risk the open, I could risk the high, and I could risk the pre-market high because we don't have a previous day high, treating this like an overextended gap down. But hold on, I think I added the extra line. No, I didn't. What is this then? Oh, that must be the halfway point. But what am I doing? It's something I was saying. Oh, see what this is first. I don't know what it is, but it's altered. Yeah, it's not even extended enough. Probably doesn't have a resistance or something. Yeah. It's nothing to watch. All right, but with this, it just keeps dropping. You freaking, but it's fine. In the short term, I'll be fine. 2 months, 15-day. This usually keeps me out of the FOMO. Just like having the big candles and you just see it's going down. But what do you call it? It's similar to like Renko candles, where you're mostly just looking at price action rather than time. And the thing is, you want to have to balance between both of them. And so I know I could do it in StockCraft, but I don't know if I could do it here. Yeah, if there's no bounce, I'm gonna be pissed. Yeah, but you know, you have 50 here. It's only 15 minutes in. You have about 10 million volume. That puts us at multiply that times 4. That's 40 million. You know, that already puts us over the estimate in the first hour. Yeah, so like it should definitely blow through anything here. And so, what do you call it? When you had the 50 million here, there's the last half of the day is where most of that is. And so stop it. Stop creating lines. Okay. There you go, one more. Dude, I just don't want that line. Okay. I'm not gonna be anal about that. So what do you call it? Yeah, 10, another 10. Yeah, put these together. Then these two. Then that's about 40. So 40 on the last half of the day. Because there was 55 in the entire day. And so if we subtract, these are about 2s. This is about another 2. That's about a 5. So 2, 2, 2, 5. That's 11. Take it off the 55. You know, you got the 40, 44, 45, that area. So just based off of the volume generate. Oh my gosh, it's going down. What are you doing? Oh well, it's fine. Well, since it's already hit the halfway point where you know it's half of the range compared to like just this day, not the entire like 5-day. Yeah, we'll do the one with 9. There's since it's already like half of that range, we're gonna say the momentum's being lost, but we're still expecting a bounce. But now the bounce won't be as high as like we were expecting before. Like, you know, I was expecting a bounce closer to, 10% over the high. So if it went up to like 25 today, I was expecting like, just a little bit over 25. Because like even this high, assuming that stock to trade's not wrong, how can I confirm that? Where are you at? Open, close, high, 22.39. Wait, what? No. It's 25, 25.27. The hell is that? Yeah, I'm not gonna worry about it. So, yeah, but we're still expecting a bounce. I'll try to get my borrows back if it bounces back to at least. I don't want to go too early because the thing is, it's like a dam when you're trading. As soon as you pull the trigger, or as soon as you make a hole in the barrier or the dam, like whatever you're trying to visualize, all the water is going to come through. So as soon as I pull that trigger one time, I'm just going to, all leverage. Even though I like have all my rules set out before the trade, I'll go back over them just for the people that just came in like a little late. But where am I? So yeah, I'm just going to let this develop because like time is going real slow for me. And I hate that it's going that far down. But it's also a $20 stock, so it depends on who's looking at it. But what am I doing? So got up this morning about 4 o'clock. Saw the borrows were like 0.55. I waited like 20-30 minutes just to see what was going to like develop. Went up to 0.77. I just didn't want to risk that because we call it at that time it was so this is 450. I was close to here. And so at that time it was like 19. I thought it was going like further down. I borrowed closer to like 445. And then that's where like I got to 0.77. I think Steven got like 0.55. But main thing is when you get your borrow fee, you're supposed to say how much money that you need to make on their play to basically cancel out your borrows. And so if I use the full position like right at the open, like if I treated this like a gap up short or something, even though it's technically a negative 10% right now, I would have needed 5% of the 10K that I borrowed. Let me just borrowed 10K dollar. Yeah, there you go. But I was about to say, I feel like I can make that cleaner. Yeah, let's do that. So That would take me 5%. If I do half of that, it takes me 10%. If I do a third of that, it takes me 15%. When it comes to like my max loss, that's something that's personally tailored to your long-term strategy, in terms of how much you want to make that year. And what do you call it? This would be closer to 60%, with, what do you call it? Like less than a third or less. Yeah. So now what's that doing? It's still doing its thing. By day. Didn't know it could get to 3 minutes. So the momentum's still being lost, waiting for the buyers to come in, waiting for the shorts to cover. What do you call it? 10 million times average price. Okay, we'll be fine. Well, yeah, there's nothing to really watch right now until this bounces. We don't know when that is. Yeah, that's pretty much it. So let's go to, okay, I did take a screenshot this morning. Yeah, see, it was only a 500K volume. Yeah, like, where is the volume? Like 11 million? Tragic. Just simply tragic. It was at 7 million, about 20 minutes ago. Was that 20 minutes? No, that'd be like 15 minutes ago. So that's 4 million, 15 minutes. Yeah. Yeah, because we had the estimate at 45, around 10. It was like 9.3 or something. Yeah, they're mostly impatient shorts. You're right, Hector. Well, the thing is, the market is trying to train you to go in early, and if you successfully get trained, you might experience a win today, but then you'll experience several losses in the future. And so I'm trying not to do that. If I treated this like a normal like gap up short, I probably just should have put in like half or a third just to get my borrow fees at the beginning. And that's also another practice I'm trying not to do. But if I did hypothetically do that, which is, it's a good practice, but it's just something I don't want to start, I want to say. Because like it's a blessing and a curse at the same time. Like if I put in like 30% as soon as it opens, like into a push, which it didn't even have a push. Like it had like, like what, 20-cent push on a $20 stock. That's less than 1%. But what was I say? That's me just complaining. But yeah, if I put in the 30%, this would be $3,000 going down from 22 to like 16. I wouldn't even cover here. I'd be looking for a cover closer to, if it was at 22, I'd be aiming for at least 30%, $22 stock. So that's $6, so yeah, it'd be right there. Yeah, $6. And yeah, that'd be good 30%, but that'd just be my first cover point. I'd cover like half profits there. And then I ride it down to like about 75%, where, if we were talking about, 9 being the comfortable area, just because it was the previous day's close. Let's see, 16, and then 75% of that, divided by 4, take off the 4, that's 12. So $12 off this. Yeah, the chances of this going to 10 are like pretty. Actually, let me try. Yeah, but that'd be something you'd have to hold for at least a day. But again, you just have to watch and see how it develops. I'd rather be safe than sorry. But what was I going to say? 75% gain. Where would that be? Now, see, this is where I could use the line. The first cover would have been here. Second cover would have been about here. So something like that. And then like this one would have just been like half. And like, I would have expected some type of bounce. And then you know, a gradual slow grind, you know, dip in the morning after like some little spike, probably add into that and you go back down. Like, yeah, there's so many ways this can go. It's just I'm only looking for one pattern, and this is not looking like. Well, it still has hope for like what I plan to trade, but this still is disappointing to see this. Very disappointed in you, HH. Shall buy. Now let's see who's saying hi. Sasuke. Why are you using stock to trade? Oh, that's a good question. Usually, it's more of just a preference for me. What am I doing? So Dontez. Yeah, that's my name. So let's go this way. Oh, that's probably what came up earlier. Hold that. Sorry guys, I have to what do you call it? I have to take off the stock crap instances. Stock crap. This thing, don't tell me it's just gonna die like that. That's so boring. What am I doing? Hmm. I forgot what the other one was. Oh, take out one. Oh, I remember. It was the consolidation I saw before. It was between 20 and like 18. It's like actually between like 21, something like that. See. No, what am I doing? This. Oh, I knew it was too late to change my workspace. I have time. This isn't going anywhere. Still at 17. Let's see. What what's your initial position percentage? Initial position percentage. No, I'm not in this stock yet. Like it didn't push in the beginning where I wanted it to go. So I didn't enter. I just have borrows, waiting for a push. That's to JCH. Hector, yeah, that is when impatient shorts get trained to go early when there is a massive short squeeze and the market heats up again for patient short sellers. Yeah, that's right. We're in winter season, and everything's just gonna start heating up. And those people that like went in today, they're gonna get chopped tomorrow. But what am I doing? Change. Filter. But there's something else I was doing. Bruh. The pre-market gain loss 50% for this momentum shift. Can't short partial at open? Yeah, you could short partial at the open, especially if it bounces back up to that point. Just because momentum is lost. I was saying that in the beginning that most people should have went in. Not most people. If I really wanted to secure my borrows, I should have went in like at the open, like into like any push. But I'm just not trying to train myself to do that because I used to do that a lot in the beginning of the year, and that led to more losses and in a lot of false what do you call that? Where you freeze when you don't pull the trigger at all because you get squeezed too many times because you go in right at the open. Like that led to a lot of those. And so if you look at my my equity chart, there's just sometimes where I just won't pull the trigger for weeks, and then you'll be on like when you see Steven make all these like ideal top tick plays, you're just like, oh, I want to do that too. And so you can't be too hesitant to go in, but you also can't be too eager to go in. And finding that quick balance, the only way to find the balance is to have an idea of what you're looking for. And so that comes into like tracking your own statistics and knowing what you're trying to trade before. And if you don't know what you're trying to trade before, at least get up early enough so you can like make up the paths that are like about to happen compared to like what you saw before, if that makes sense. Yeah, but there's really it's not looking good, guys. Like it's already at 15.5. What do you call it? Yeah, and I'm not chasing this. Like not at all. At this point it's so far down. Let's see. Yeah, at this point it's like so far down that it'd have to wait till like 11 o'clock for it to bounce all the way back up to the open. And at that point, it wouldn't even be worth it because we'll be in a different liquidity like phase of the day. And it's gonna keep coming up. We might be able to, what do you call it? Make a play on another day based off of this. If it does some type of, bounce, consolidate around the same area here, or like, tries to retest this high, then we go for like not a double top, but like something around like the breakout area. But other than that, there's there's no odds on this anymore. Like even if you tried to short like here, there's not a whole lot of reward. Like if you held it for like a couple days, there's no guarantee that it's gonna go down like here, because it went down really fast, like within 30 minutes, and so this kind of says that it's gonna do some type of pullback, but after that, I don't know if it's gonna keep continuing its fade, or if it's only gonna pull back a little bit, or if there's already been an attempt at a bounce, but there's just so many people shorting, like you just can't really tell at this point. But the thing is, at least having the idea of what to do is going to keep you in control. Even though, you don't have control in the market, but you do have the ability to speculate with like educated high odds like technique. This is just so crushing that it's just going. I woke up so early. Ooh. But it's okay. Oh no. Like part of me is just like, I knew it was up 500%. Anything over like 400% in terms of parabolics, it's a really, really high chance it's just gonna crash. And so like the more I think about it, the more I just should have like went in half. But at the same time, if I'm not comfortable, I'm not gonna trade. And so like I'm really conflicted, but it's just annoying. Okay, let's see. What is he saying? It makes sense, but if there's any, is there any way it can recognize the open, have push, or won't have the push? So that's the thing. You can do a lot of things to predict the push, and you can track statistics to, get an average upper limit and lower limit of the push. But when it comes to the actual like opening, you don't know who's going to be attracted to that, because like news travels slow. Sometimes like, there's people that were trapped in the market and you don't know which way they were going. Like you don't really know. That's why the first like 5-15 minutes of the market is kind of noise. And so you don't know if this like pullback in the beginning was just the people that were trapped here trying to get out, or if it was the actual like people that plan and they're committed like for the rest of the day. So you kind of want to see how it opens. You want the pattern to reveal itself. And if you're talking about like, is this predictable? Most of the time there's always some type of dip, but like this little extra extension right there, that's something that's, you can't really predict that. You can just say this is a tendency from watching previous top gainers. And what does it say? It makes sense, but there's anything that can recognize the open, have a push, or won't have a push. So yeah, that's where it comes back to the float. Not the float. It comes back to the float compared to the amount of volume coming in. You also recognize that this was like super overextended, so you knew there was some type of drawback coming. Other than that, was it this tight consolidation here with all that? This probably shook out a lot of people. And like when it did this big like jump, some people they settle. And so when they see there's like $6 right here, that's a decent gain. Like, some of these guys are only looking for scalping. And so when they see stuff like that, there's just so many reasons that like this spike is going to happen. But normally you would expect, especially in this kind of market with all the noobs, like a lot more dip buying, diamond hands and stuff like that. But, too many people just recognize that this was, going down. And so they got out. So I'm not too upset. But I definitely made some mistakes. But I'm still okay with it. This is 400 down. Odds on the back end are kind of Yeah, I'm not trying to do something on the back end right now. Like everything tells me I should have like went in the pre-market, but this is like hindsight. Well, technically, I wanted to do it before, but I wanted to stay disciplined. So this is like two sides of me are like really upset right now. Let's see. What does he say? I chased once CODX last year. It was not pretty. I could hear my heart beat. I did not know better last year, but I do now. Okay, Hector. What you're saying is if it bounces, then it becomes a slow grind, which has the resistance, which has the risk of potential squeeze. Yeah. So wait, let me read that again. What you're saying is if it bounces, then it would be slow grind. If it bounces, then it would be slow grind. So slow grinding up. Yeah, that's about right. But it's kind of already reached that point to where, this would be the only other resistance that it could rely off of, like the previous day where we talked about how this is like 40 million right here, and we're already at we're already at like a decent chunk based off of like our estimates. And what was I say? Oh, it's actually not that bad. But what was I say? Yeah, that slow grind will first have to eat through the pre-market resistance. Then it will have to eat past the resistance at the close, and then it would have to go to the high a day. And now getting past all that, that's going to require, a lot of shorts covering, which, they're in here. They're early shorts. It's going to require a lot of volume being attracted for the longs. And, they probably saw some type of support being held. But they also recognize that it's up 500% on like over 5 days. And so they're probably not going to be the first to jump in, especially when there's only like 15 million volume and it's already been an hour and the yesterday was, 50 million volume. Because like the thing is, if I was along, I realize there's only like, 30, 40 million here. I don't know if that's going to be enough to catch this falling knife because it's up so high. There's going to be a lot of pressure when it comes down. And, what do you call it? When it comes to like float, buyer insufficiency. If you start counting like the float rotations and everything like that, you can kind of get a judge, like a very rough judge of how fast it's going to like hit whatever is there. And if it goes like right through that, then it'll slingshot through. But you can see right now that it didn't do that. It's still at hold on, let me refresh this. Yeah, it's still in the same area. So if there's a slow grind, there'd have to be a lot of volume coming in, and then it'd have to go after 11 o'clock, and then that's where the slow grind would come in, and then goes back up there. But like honestly, I'd only see it go up to max like 20s, like up to like 1 o'clock area, between like 11 o'clock and 1. After that, that's when you can start seeing any kind of real back end action to where like like double top, or you see a strong close, like whether it breaks out the next day or whether it like comes back down. There's a legit 6 different points that this can shift, and you just don't know what it is right now. So what am I doing? What are you saying? I like that analysis from perspective of each archetype of trader. Noob versus scalpers versus impatient short diamond hands. Market maker, entire float owner. Yeah, that's what you have to do. You have to know the players first, and then you have to know what kind of stock the players want to be in, and then you just think about the one with the most high odds that puts you in the highest odds to win position. And the thing is, you have to survive each one of those players. You have to be on the backside of them to be able to understand what they're really worth, or like how to stay out of their way, but also kind of be on their team temporarily, because at the end of the day, you're alone, and you're gonna have to trade for yourself. But what am I doing? Remember saying I remember saying you like people that own swords. Yeah, maybe one day you will be really good at catching falling knives. Okay, okay. I'm trying to think of the last few falling knives I had, and yeah, they weren't pretty. ENTX is one of them. I think that was a 5K loss. And then I like scalped like 3K back, and so that gave me a lot of bad habits. Who is this? Are you hopping on a call or who? Oh no, I don't do that anymore, bro. Wait, let me put this off to the side. All right. So, yeah, it doesn't look like we have anything for now. What am I doing? Oh, okay, it's going back up at least. Now, if we can get a juicy bounce, I can at least get my. No, it's already reached that first like profit target. If I go in now, it'd be worse than chasing. If anything, I just sign up for the rest of the day, to basically divide my attention, where I could like, I can make that 400 back easier if I just put, the time that I'd spend trading the rest of the day into studying for the next play that comes up, or trading on like the back end or something. Because I'm not going to sell my shares, because that's one of the things I used to do. Is like I had to be like, oh man, I need to get some of my borrows back, and like you see that's like $1 per share right now. If I credited 500 of my shares back, I'd get like a fifth of what I borrowed back, which at a 40, that would be like $80 back, and so not worth it. But what is that doing? Oh yeah, I forgot. HX is curling here. Yeah. Oh yeah, I know you're messing with me, Anthony. Um, Knives, falling knives can really mess up your account. See these death candles. Normally you want them like a little later in the day. Did you upgrade the? Yeah. No. Let's see. What am I doing? What am I doing? No. Hmm. You. No. No. What's that doing? This thing is pretty slow right now. So I need to check to see if there's an update. 3.83. I'm pretty sure we're at 3.87, if I remember right. Let me work on this after the stream. Where are you? Where is it? There it is. All right, guys, we're gonna end the stream early today. Let's see. If HX pops here, would you use open at the risk open as the risk or yesterday's high / close. Okay, so if it popped right now, like at least, let's see, $20 stock. So if it popped at least like $5, so from, we're at 16 right now. Oh, I have it on this side. Okay, where I did that. But I was about to say, if it popped at least like $5 right now, then went all the way back up to, what was the open, 22? Yeah. Then I'd do that. Yeah, you're right. I risk that $2, so that'd be 10%, and then I'd aim for like 30%, which would be like, $4 or $5 down. No, actually, it'd be closer to $6, but I'd settle for like a 20% gain any day. And then the thing is, I'd go in full position, like just straight to get my borrow fees back, or just take a loss and learn. Especially since it's going towards that 1020 area. So like this is where, a bounce is expected, but we don't know how big the bounce is going to be. And if the bounce doesn't happen like, strong enough or fast enough, then we're going to, what should I say? Then we're going to get into like the commitment. You're going to have to hold this for the rest of the day. And then, you have an edge still, but it's still not enough to make you walk away from the computer comfortably. So you just might be, reading a book, watching stretching videos, like whatever you do. Like I sometimes read quotes. Yeah, but that's all I really had to say about that. So how would you track HHX? Would you consider it a failed pattern? How would you categorize it? So this is one of those things where it's a multi-day runner, but it's not the multi-day runner that we like. Because with the multi-day runner, you want to track the amount of range was created, the consolidation area that you want to risk off of, and then you're going to bet off of that breakdown, and then use more of the range as the idea of like the max dollar block and like stuff like that. Just to have something to track based off of what you're going to risk. And so what do I want to say? So like it has to be like a very tight consolidation. Wait, I have a computer. I can just show it. What's about doing? Yeah. So let's say this entire thing right here just shifted over into like the previous day. If that was the case, and then this like, came down and came up a little bit, then I track it as like overextended gap down. Just because like, kind of went up 100%. What do you call it? It was like 9 to like 25. Like if everything just like shifted over a little bit, then I track it as like an overextended gap down, because you got that 100% like up, you have the consolidation, you have the 15% pull before, and then you risk off of that consolidation. But in this case, it's been running for multiple days, and so you kind of have to give it some type of respect as a multi-day runner. But the thing is, with the multi-day runner, you don't really know when's the first red day gonna be, but you do know that like there's a point like around 400% that it's just a little too overextended and it's gonna come down at least a little bit. And so you want to treat the multi-day runner like a multi-day trade a little bit. Like you want to get that meat of the move on the first red day, but you kind of want to have like a max dollar block or like some type of volume related factor that tells you this is the day. And then you're going to make a plan based off of, that, not mining function, but like your model is going to be built off of that one factor that you're betting off of. And then that's where you make your play. And then it gets closer into like risk management. And then, risk management on a gap up, a multi-day, and a overextended gap down. They're all the same. Build the position, stay aware of changes in liquidity, the amount of volume coming in, size of float, other tendencies around that area, that you just have to either experience it directly or secondhand, like through Steven's webinars, or you know, you track some type of statistic just to show you the general like failing points or key points. And yeah, that's how it would go. And so in this case, I'd stick with multi-day runner just because it's not an ideal overextended gap down. But in terms of like just pure factors that you can like pull out, like range, consolidation, minimum of volume, and things like that, you can just trade this and kind of not track it as a pattern, but that doesn't really help you. But it's not an ideal any of the patterns. And so it's really, it depends on the standards that you set for your statistics. If it meets all the criteria, you track it. If it doesn't, you don't track it. And like that's the only difference between the two. Because if you start tracking too many of these tickers that are worth a trade but not worth a track, your data quality is gonna go down. And so yeah, I pretty much already said it. Like it's worth a trade but not worth a track if it doesn't meet your pattern specific criteria. And so yeah, that's pretty much it. Let's see. So I feel like there's something else. Yeah, but that's it. Well, I'm going to update my platform, and yeah, I'm gonna end the stream 4 minutes early today. So you guys, good luck. Thanks for tuning in, and I'll catch you guys later. Shout out to Caesar, Hector, Patty, JCH, Anthony, and you guys have a great day. I'll leave you with the sappy screen again. Where you at? There you are. Peace, guys.